All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Last day of the trading week here today, and the last full trading day of the year. It is one where we will have, or excuse me, you should say last full trading day of the year. Last kind of trading week of the year. We will have a full day on Monday. The markets will be closed on Tuesday, but it is one where yesterday into the close we saw another pretty incredible kind of rip your face off rally, and one where S&P moved 100 points. 100 points in less than 2 hours. That is a monster move. It's the type of move that is reminiscent of what we saw after the flash crash. The day of the flash crash, we had the crash and drop, and then we saw this kind of pop into the close. That's what yesterday's close looked like, reminded me of, felt like. And one that, it didn't do anything to really change the environment. It did maybe more to solidify the environment, or to basically say, look, the environment's not changing. We're not seeing any sort of real compression and volatility here, and I think that's what it means. We didn't see a major catalyst, a massive catalyst to say, oh, okay, you know what, boom, there it is, something game changing here. But this is a product of the continued enhanced volatility that is out there, and in some regards historically high volatility. Now, I know in terms of just the VIX and things like that, we can't use those to argue the historically high volatility, but we did look at some things yesterday around that. Now, market's set to gap up a little bit here this morning. It's set to gap up here to 2,500 on S&P futures. I don't think that's overly significant. I don't think it's overly meaningful, but I do find it pretty significant, pretty meaningful that we talked about these bottoming volumes that came in on this dip right here. And, those bottoming volumes. Yes, we made one more flash lower, but we're up in that level, up in that area here. And one where it took two basically 100-point rallies to get there. So pretty intense, kind of cupping pattern here over the course of the last week. One where option values are incredibly expensive still, and we're not seeing a volatility compression overall. There's not a lot of data, information, news out there this morning. We see some analysts commenting on different things here and there, some of their top picks for next year and all that kind of stuff. That's very typical this time of year. We saw some Japanese data last night, which came in slightly better than expected, but continue to show slowdown economically. We'll see the Chicago PMI number here in about 15 minutes after the market opens. And that could be a number that moves the market a little bit. We'll also see oil inventory data a little bit later. And that could move the market a little bit, but overall, the market is relatively devoid of catalyst and very, very choppy, jumpy, with very little price stability within ranges. I don't think investors are going to look and go, "Ooh, Chicago PMI. All right, let me change my opinion on this market." I don't think we're going to be talking about anything of that type of nature. I think right now we are into the year-end action. We've talked about the short covering and how we're in a market that a little slanted there to the downside. Do we see some short covering? And that's really what the last two kind of closes look like. Looks like a heck of a lot of short covering. Even when you go look at some of the shorted names out there, They made some of the bigger moves, but overall, nothing that I look at and go, wow, okay, this market's materially different today than what it was last week at this time. We have not seen the metrics change to a material degree here. We have not seen that happen. In fact, if we pull up the bullish percent index, which we talked about a little more in depth yesterday. It barely budged on the 100-point rally on Wednesday, and yesterday barely budged on another 100-point rally in the last hour or hour and a half of the market. So very little budging here on the bullish percent index, and very little budging on a lot of the other market metrics. It's very much a snapback rally off of a very oversold condition, an oversold condition that had been oversold and oversold and oversold to varying degrees, and was, let's face it, oversold here at 2,600, and it was oversold here at 2,500, oversold at 2,400, oversold at 2,300, and down here at 2,300 when it decided to make its bounce here. Now the market is starting to open up as I speak. We're looking at about a 13-point open higher, 14-point open higher this morning. You'll notice that yes, we're opening higher, but the VIX is barely lower, and the VXX is actually opening up in the green. That tells you we're not, the market's not waking up and going, ooh, volatility's gone. We had something game-changing, and now, things are going to kind of go back to relatively normal, normal price ways, right? We don't see that here with this open. I don't think we can read a heck of a lot into this open overall. Now, from a challenge standpoint, I looked at things into the close yesterday with the rally. Option prices did not compress very much at all. We did see a little bit of implied volatility drop in things like Bank of America, JP Morgan, and whatnot, but not to any kind of monster degree that I'd like to see, to say, hey, you know what, I have a great risk-reward scenario here. As the day progresses, I'll continue to look for, good risk-reward scenarios where the options are priced right. And, I'm not overly optimistic that that's going to happen. I'm not overly hopeful that that's going to happen. It definitely could, but it's also one where I look and go, you know what? Friday, path of least resistance in the market is likely going to be lower, at least for the last hour. That's the tendency, right? For the first bit, who knows, but for the last hour, lower there. You've seen me in years past on the last day of the year, in the last hour, buy right at the close. On some of that last hour sell, and I do think we'll probably have that opportunity again here this year. I think that opportunity could actually be a little bit better this year than what it has been, as long as option prices compress a little bit and get a little bit cheaper here. Because one of the things we will see, if the market just hangs out at this level all day, you're going to see option values for things like the SPY and the IWM, some of the closer to the money options, you're going to see them shrink by 20% here today if we see the market just chill out at this level all day and not have the same level of volatility that it has had over the last little bit. Now, individual stories out there, not a lot of them. We have the analysts talking about different things, and their top picks for next year. And okay, iPhone, it's already priced in the worst, and you hear a lot of those arguments out there from different analysts. But one piece of news that I do think is very worthy of note and something significant going into next year is the news on Tesla. And this isn't a story I want to buy here on the open this morning. This isn't something I'm looking to say, hey, let me get in right here. But Tesla did announce something here. They announced that Larry Ellison, who is the founder of Oracle and a very respected gentleman by investors, it was announced that he was joining Tesla's board, along with Kathleen Wilson Thompson, and she's from Walgreens. Both of them very, very respected, highly reputable, and both who are not replacing anybody on Tesla's board, but are actually just coming into it here. And you know me, I'm very bullish on Tesla long term. I think this is one of the better stories out there in the market long term. And Tesla has gone through a 18-month consolidation, right? If we pull up a weekly chart here, about an 18-month consolidation through about a 100-point range here. So it's been pretty intense, but it is a heavily shorted company. It's one that has a lot of positives going for it, but it has a lot of grizzly bear action and grizzly bear concerns with it. Analysts are not very high on it. Obviously a lot of short sellers are very high on Tesla, and thinking that it's going to drop significantly. Some analysts have sub $100 price targets on it, but this is one where I think you look at this news. I don't think you look at this news and if you're bearish, you all of a sudden become bullish. I think if you're bullish, it gives you another feather in your cap to say, you know what, as we get into next year, we start breaking out of this consolidation, especially off a potentially higher low. That has a lot of significance. That has a lot of meaning as we go forward in 2019. And this could be a $500 stock, early on in 2019 if just a few things go right for it. So a very interesting name out there, and one that, I think should be on everyone's watch list, and, something that, could really have a good year next year. Again, I'm not buying it this morning. I'm not interested in buying it this morning. I'm not even interested in looking at the option values this morning, as I don't think they're going to be any good. A little later in the day, though, I will look and will assess it. But another one, and this one's on the challenge watch list, is Visa. This is talked about by Baird, who came out on a lot of different companies here, but basically talks about the risk reward with Visa being highly favorable. And I totally agree. I absolutely agree in it being one of the better setups going into next year. It's finally this is really the first major pullback since its IPO. If we go back and we look at Visa since it IPO'd back here in April of 2008, it pulled back initially, after the first 2-3 months, pulled on back, and it has been a freight train with very little pullback. It had one bad week during the flash crash, and other than that, it has been an absolute freight train that's finally had a pullback. And, it's a company that pretty much every quarter sets a new high. I think it will, that is not going to go away, as it did set a new high here October, so it did not break that here this quarter. But again, one I don't think is in a, my apologies. Woke up with a little bit of the sniffles this morning, so my apologies there. But, not something I think is a great buy right here, right at the open, but something that, if we're able to build a material higher low, see those option values come down, get into a nice little risk-reward position on an option trade, could be very, very nice here going into next year. And I believe that with Visa. American Express is another one, albeit American Express I do think has a few more risk factors associated to it, but both of them I think are quite undervalued right here. When the market starts to go bargain hunting, which, let's face it, the market hasn't gone bargain hunting yet. We've seen these 200-point rallies this week. Those aren't bargain hunting rallies. Those are just snapback from oversold conditions. And we haven't seen the market really want to go bargain hunting here just yet. You look at the sectoral breakdown this morning, at least right here on the open, you can see consumer staples are leading the way. Consumer staples leading the way, utilities, those are the top two performers here this morning. Energy, industrials, consumer discretionary, technology lagging here this morning, financials lagging, materials lagging. So this is kind of the opposite setup to what we saw on Wednesday, where the market opened up and it was a little higher, but we saw this kind of bullish spread with the major sectors. This morning we're seeing a pretty bearish spread with the I should say bearish, but we're not seeing a bullish spread here with the sectors. The sectors do reflect a little bit of safety, here initially this morning. We're also seeing that with the VIX up, even though the market's up, with bonds up, even though the market is up. So not one of those environments where I say, man, let's go chase right on in, to something here this morning. It's also one of those environments where option pricing is still, in some regards, historically high. Now, I know we can't look at the VIX and say that or something like that, but, with a lot of individual stocks, you got Apple here. This for the price of Apple and everything else. If we put it down towards normal implied volatilities, this is a $4 option going for $6.40. And, it's not that the option is priced incorrectly. The option is priced correctly. Given the fact that the market has this propensity for these 100-point moves, it is priced correctly. But do I want to bet on another 100-point move? No, I really don't, right? That's not what is, that would not be normalization. That would be continuing with, some of the historical nature of things here, which, I do grant you is a risk, but, something that, I'm not going to go and buy overvalued options, betting on that type of action continuing. So, just looking at things here initially this morning, GM's kind of interesting. I think even some of these banks kind of interesting. I think anything you have to have a quick trigger, meaning, here on something like Bank of America, and unfortunately it's not showing. Okay, but here on something like Bank of America, you'd have to pick a level that you want out at and, move. Get out fast if it starts to go against you. And I think that's, what is there with, relatively expensive option values. For me, the challenge, yes, we had some of these higher lows come in yesterday, and then some of these just rip your face off rallies here in the last hour. And so, yes, pushed on into some areas where bullish triggers in the short run. Yes, absolutely. Good risk reward scenarios once the hour completed itself. No, not at all. So, that's where I'm sitting. I will kind of take a look at, the technicals a little bit closer here after the morning shakes out. I'm very eager to jump into a trade, but at the same time, the odds have to be strongly in my favor for me to do that. And as we go into next week, we have Monday, which will be the last trading day of the year. High propensity for the last hour to be a sell, and that is something where I wouldn't mind buying something like an Apple into that sell. Then we have New Year's, and then the markets will open up for 3 days, for the last 3 days next week. And, I do think it's going to be I think it's going to be a very interesting January. There are a lot of rumors and myths about Januaries, as goes January, so go the markets and all that kind of stuff, the January effect, and a lot of myths. And we'll talk about some of those myths because I do believe most of them are myths, and I believe the data suggests it. And so it's kind of like a Santa Claus rally. It's not something where the data suggests that, hey, that is consistent and you can bet on it over time. But there are some things that we can look at that I do think are going to be very telling as we get into January, especially around the earnings. And we'll be looking for some of that. But in the meantime, I'll make a trade where the opportunity is right, where some of the volatility compression might be. I'll have my eyes on this VXX here again, as I do expect that it has a sharp pullback, but I need some time for that pullback, because generally when the VXX tops, it's one where it could have one or two real big down days when the market has some explosive upside days. But the market's had two explosive upside days, and the VXX has not pulled back. Yes, it's off its highs, but it has not had any type of material pullback associated to it. So that to me suggests that the market is not expecting further upside, in a real kind of bullish way. Yes, more upside in terms of just a flash melt up. Yeah, that's definitely on the table, but not something where the market's going, okay, investors are going to return, valuations are going to return, normal fundamentals are going to return. I don't think we're talking about a market that is pricing that in here as of yet. All right. Alrighty. Well, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.